What if I told you that the fastest growing group of renters in America today isn't millennials or Gen Z, but seniors? That's right. Millions of Americans over the age of 55, many of whom spent decades building equity and paying off mortgages, are now selling their homes and choosing to rent instead. According to the U.S. Census Bureau, the number of renters aged 65 and older has surged by more than 30% in the past decade, and this trend shows no signs of slowing down. For years, the rental market has been laser-focused on younger generations, those in their 20s and 30s, by building luxury apartments with rooftop pools, co-working lounges, and smart home apps. But while everyone was chasing digital nomads and young professionals, another demographic wave was quietly gaining momentum. Today, seniors represent one of the most stable and financially secure renter groups in the country. Reports from the National Association of Realtors, NAR, highlight a steady decline in homeownership among older Americans, while data from Zillow Research shows that downsizing and relocating have become leading lifestyle choices for retirees. So why is this happening? Seniors aren't simply being priced out of homeownership. In fact, many of them are cashing out by selling long-term homes that have appreciated significantly. Remember, the Federal Housing Finance Agency, FHFA, House Price Index shows national home prices are nearly 40% higher than they were a decade ago. Retirees are converting illiquid equity into cash they can actually use. Renting allows them to enjoy flexibility, avoid the headaches of maintenance, and live in communities that provide social connection and convenience. And here's the kicker. They're exactly the kind of tenants every landlord dreams of. Unlike younger renters who often move every year or two, seniors tend to stay put. They value stability, pay on time, and are looking for a simpler, more predictable lifestyle. If you're a real estate investor or landlord, this isn't just an interesting demographic shift. It's a massive business opportunity. In this video, we're going to break down three things. First, why millions of seniors are walking away from homeownership. Second, where this trend is happening the fastest. And third, what landlords and investors can do to adapt. Because make no mistake, this is where the future of the rental market is heading. The monastery sat on the edge of a sleepy town, its walls weathered by years of wind and rain, its roof tiles darkened by moss and time. For most people who came there, it was a place of peace, a refuge from the noise of the world. But for Sister Lynn, it was more than that. It was a shield, a hiding place where she had buried the most painful fragments of her life. She rose every morning before dawn, her feet bare against the cold stone floor, her hands folded in prayer as the temple bell echoed across the hills. The rhythm of life in the monastery was simple, steady, and unchanging. Days were filled with chanting, gardening, and teaching children from the nearby village. She moved through it all with quiet grace, her expression calm, her eyes lowered, as though she carried a silence too heavy to speak aloud. No one in the village knew who she had once been. To them, she was only Sister Lynn, the devoted nun who spoke little, smiled softly, and lived for others. But beneath her composed exterior lived a woman with scars invisible to the eye. Sometimes, in the stillness of night, when the other nuns had already fallen asleep, she would stand by the old wooden window, staring into the moonlit courtyard, clutching the small wooden rosary in her hand, as if it were the last anchor keeping her from breaking apart. She remembered things she had tried for years to forget. The glittering halls of a mansion where she had once lived as a daughter-in-law of a powerful family, the sound of cruel words whispered behind her back, and the suffocating weight of a world where she had never belonged. Most of all, she remembered the child, the fragile life she had carried, the tiny heartbeat that had once pulsed inside her. That child was the reason she had left everything behind. The night she was forced to let go, something inside her shattered. It was not just the loss of her child, but the betrayal, the shame, the merciless grip of a family that had decided her fate without mercy. When she entered the monastery, she thought she had left that life forever behind. Years passed, and she had grown used to the quiet rhythm of prayer and meditation. But wounds of the past never truly faded. They only sank deeper into the shadows. and shadows, no matter how deeply hidden, always waited for the right moment to return. It began one afternoon in early spring. The air was soft with the fragrance of peach blossoms, and sunlight spilled across the monastery courtyard. Sister Lynn was sweeping fallen petals when she heard voices at the gate. A group of villagers had arrived with a young man, a stranger who looked weary from travel. His clothes were neat but dusty, his face pale from exhaustion. He bowed respectfully, and when his eyes lifted, they met hers for a brief second. Something inside her froze. Those eyes, dark, searching, filled with an unspoken familiarity, struck her like lightning. She had never seen him before, and yet, as he stepped forward to ask for water, a tremor ran through her heart. His voice was steady, polite, but beneath it, she sensed a weight as heavy as her own. Later, when she carried the water to him, her hands trembled. She could not explain why, but she knew with a certainty that terrified her. This encounter was not a coincidence. Life, which she thought had given her peace, was about to unravel. And deep inside, where she kept her most fragile memories locked away, something stirred awake. Part 1. Why seniors are choosing to rent instead of owning homes. The traditional view of retirement in America often included a paid-off house with a white picket fence, a symbol of stability and financial security. Yet in recent years, an interesting shift has emerged. Many seniors are selling their longtime homes and moving into rental properties. This decision is not driven by necessity alone, but increasingly by choice. According to data from Zillow Research, Redfin, the Federal Housing Finance Agency, FHFA, and CoStar, there are 4 major reasons seniors are trading homeownership for renting: lifestyle flexibility, freedom from maintenance, financial advantages, and the appeal of community living. 1. Lifestyle flexibility. When children grow up and move out, the once bustling 5-bedroom house suddenly feels oversized, even empty. Downsizing has become a major motivator for older adults. Zillow Research reports that over 45% of individuals over the age of 60 express a desire to downsize once they enter retirement. Renting offers unparalleled freedom compared to owning. It allows seniors to relocate with ease, whether to be closer to children and grandchildren, to enjoy warmer climates in states like Arizona or Florida, or to explore new environments without the burden of a permanent mortgage. In fact, Zillow's data suggests that many retirees view housing less as a financial anchor and more as a lifestyle tool. Renting offers the flexibility to experiment with urban living near cultural hubs, or to move into quieter suburban or rural communities when they prefer peace and space. Unlike ownership, renting does not tie them to long-term property taxes, unpredictable market conditions, or the challenge of selling a home if life circumstances change. From a psychological perspective, this flexibility can be liberating. Seniors often describe renting as giving them mobility without anxiety. They no longer have to weigh whether it's worth investing in expensive renovations, nor worry about being stuck in a home when they'd rather explore. In many ways, renting provides seniors with something even more valuable than space: time and freedom. 2. No more maintenance. The realities of aging make home maintenance an increasingly heavy burden. At age 70, climbing onto the roof to fix shingles, repairing leaky plumbing, or even keeping up with yard work can pose serious risks. Even hiring contractors brings its own stress. Managing costs, overseeing projects, and handling unexpected repairs. Data from Redfin's Housing Data Center highlights that 55-plus communities, neighborhoods designed for active older adults, are seeing strong growth in rental demand. These communities often emphasize a maintenance-free lifestyle. Landlords or property managers handle repairs, landscaping, and upkeep, allowing seniors to enjoy their retirement years without the nagging responsibilities that come with homeownership. The cost of maintenance is another factor. A typical homeowner can spend between 1% to 3% of their home's value each year on upkeep, according to industry averages. For a $400,000 home, that could mean $4,000 to $12,000 annually. For retirees living on fixed incomes, those numbers are not insignificant. Renting, on the other hand, shifts these costs to landlords, providing predictability and peace of mind. This appeal is not just financial, but also emotional. Many older adults find relief in knowing they don't need to call plumbers, roofers, or electricians anymore. Instead, they can spend their time and energy on activities that bring them joy, travel, hobbies, or simply enjoying family visits. 3. Financial freedom. For many Americans, their home is their single largest asset. Seniors often find themselves house-rich but cash-poor, owning significant equity but lacking liquid assets for daily expenses. Renting provides a solution. By selling their homes, seniors can unlock hundreds of thousands of dollars in equity, converting a liquid wealth into cash that can be used for medical bills, travel, leisure, or investment. The FHFA House Price Index shows that from 2013 to 2023, home prices nationwide rose nearly 40% on average. For many seniors, this surge means their longtime homes have appreciated far beyond what they paid decades ago. By selling at today's elevated prices, they are essentially harvesting the gains of a long bull market in housing. This liquidity can be life-changing. Some seniors use the funds to cover long-term healthcare costs, which continue to rise annually. Others prefer to invest in lower-risk portfolios to generate stable income streams. And some simply wish to enjoy the fruits of their labor, traveling the world, supporting their grandchildren's education, or pursuing long-postponed passions. Renting, in this context, is not a sign of financial weakness, but of strategic flexibility. It transforms real estate from a tied-up asset into a tool for financial independence. 4. Community and connection. Finally, one of the most overlooked but powerful motivators is the human need for connection. Seniors today are not just looking for a roof over their heads. They're searching for meaningful social engagement. This is where active adult communities and senior-focused rental developments play a crucial role. According to CoStar News, the demand for such communities has surged, particularly in states like Texas and Florida, where developers are racing to meet the appetite for senior rental housing. These communities are more than housing. They are ecosystems designed around wellness and connection. Facilities often include fitness centers, golf courses, swimming pools, walking trails, gardening spaces, and organized social clubs. The emphasis is on fostering friendships, building networks, and combating loneliness, a growing concern among the aging population. Research consistently shows that seniors who maintain active social lives report better mental health, lower rates of depression, and even longer lifespans. Renting in these communities not only removes the stress of homeownership, but also actively contributes to a healthier, more fulfilling lifestyle. For many older adults, this sense of community outweighs the traditional pride of homeownership. The appeal of living among peers with shared experiences in a place designed for their needs makes renting a natural and attractive choice. The decision by seniors to give up homeownership and embrace renting is not a single-story narrative. It reflects a convergence of lifestyle preferences, financial strategies, and emotional needs. Data from Zillow, Redfin, FHFA, and CoStar confirms that this is not a fringe trend, but a growing movement. For today's retirees, renting is not a step backward. It is a step toward freedom, flexibility, and fulfillment. By letting go of the responsibilities of homeownership, seniors are carving out space for what truly matters in the final chapters of life: independence, community, and peace of mind. Part 2. The regional boom of senior renters in the U.S. While the shift from homeownership to renting among seniors is happening across the United States, some regions stand out as epicenters of this demographic wave. Local market conditions, cultural preferences, and economic realities are shaping where older adults are choosing to rent rather than own. By looking at data from the U.S. Census Bureau, Redfin, and Zillow Research, we can trace how cities from the West Coast to the Midwest and down to Texas are experiencing an unprecedented surge in senior renters. This regional perspective is crucial. National averages can obscure the intensity of localized trends. In reality, certain metropolitan areas are becoming case studies for the broader demographic transformation. Let's examine 5 key markets: the San Francisco Bay Area, Pittsburgh, the Twin Cities, Minneapolis, St. Paul, Portland, and Texas metros such as Austin, Dallas, and Houston. San Francisco Bay Area. Seniors in the tech capital. The Bay Area has long been known for sky-high real estate prices, making homeownership increasingly unattainable for younger generations. But surprisingly, this same economic pressure is reshaping housing choices among seniors. According to census data and analysis from Zillow Research, renters over the age of 65 now make up more than 13% of the total renter population in the Bay Area. There are several reasons for this. First, the cost of maintaining a home in one of the nation's most expensive real estate markets can be overwhelming for retirees on fixed incomes. Property taxes, which in California are tied to assessed values, can still climb significantly if seniors have not owned their homes for decades. Second, the Bay Area offers a unique lifestyle appeal. Cultural institutions, medical centers, and community networks that remain attractive even as living costs rise. For older adults, renting provides a way to stay connected to the region without being weighed down by ownership costs. Downsizing into apartments or senior-focused rental communities near San Francisco, Oakland, or San Jose allows them to access urban amenities, reliable public transportation, and proximity to family members still working in the area. Pittsburgh, a surprising senior rental stronghold. In contrast to the expensive Bay Area, Pittsburgh represents a different kind of story. Here, affordability is not the primary driver. Instead, it is the city's aging population and a long history of multi-generational families that shape the rental landscape. Seniors aged 55 and older now account for roughly 18% of the city's rental market, one of the highest proportions in the country. This phenomenon reflects the broader demographic profile of Western Pennsylvania, where the median age is higher than the national average. Many older Pittsburgh residents sold homes in the suburbs or small industrial towns and chose to move back into the city. Renting offers them access to healthcare facilities, cultural venues, and easier mobility in an urban setting. Redfin data also highlights that Pittsburgh has seen a steady increase in senior-friendly rental developments, particularly in converted industrial buildings. These loft-style apartments often attract empty nesters who want a vibrant city life without the responsibilities of homeownership. Twin Cities, Minneapolis, St. Paul, a Midwestern example. The Twin Cities provide another fascinating case study. Seniors now make up more than 15% of the renter population in Minneapolis and St. Paul. The reasons are a mix of climate, culture, and economics. Although Minnesota winters are notoriously harsh, the state's healthcare infrastructure is among the best in the nation. Seniors who prioritize proximity to top-tier medical care often choose to remain in the metro area. Renting allows them to downsize from suburban homes and relocate closer to hospitals, clinics, and specialized services. In addition, the Twin Cities boast a strong cultural and recreational environment, with theaters, parks, and community programs catering to retirees. Developers have responded by expanding 55-plus rental communities and age-restricted apartment complexes that combine affordability with social amenities. According to CoStar data, vacancy rates in these specialized properties have remained consistently low, reflecting strong demand from the region's older adults. Portland, Oregon, a decade of steady growth. Portland has built a reputation as one of America's most livable cities, attracting not only young professionals, but also retirees seeking a progressive and environmentally conscious lifestyle. Over the last decade, the share of renters over 65 in Portland has grown from under 10% to more than 12%, according to U.S. Census Bureau estimates. This steady rise reflects broader trends in Oregon. Seniors are increasingly drawn to urban centers that emphasize walkability, public transit, and community engagement. Portland's emphasis on sustainability and active lifestyles resonates strongly with retirees who want to remain independent but socially connected. Zillow Research has also noted that Portland's relatively high home prices make renting an appealing alternative for seniors who wish to unlock equity from their homes while still living in desirable neighborhoods. Unlike more transient younger renters, older Portland renters often sign longer-term leases, providing landlords with stable tenancy. Texas, the fastest-growing senior renter market. Perhaps the most dramatic surge is happening in Texas, particularly in cities like Austin, Dallas, and Houston. According to Redfin and Census Bureau data, Austin saw an 81% increase in senior renters over the past decade, one of the sharpest rises nationwide. Several forces are driving this trend. Texas's lower cost of living, absence of state income tax, and warm climate make it a natural retirement destination. But beyond financial advantages, Texas cities are actively developing senior-focused rental housing, from active adult communities to luxury retirement apartments. Austin, in particular, has become a magnet for older adults seeking both cultural vibrancy and affordability compared to coastal cities. Dallas and Houston, with their diverse economies and extensive healthcare networks, also attract retirees from across the country. CoStar's commercial property reports indicate that developers in Texas are scaling up investments in age-restricted rental complexes, often integrating gyms, clubhouses, and social programs. This reflects the recognition that Texas is not only growing in population overall, but also rapidly aging, a demographic shift that has profound implications for housing demand. Visualizing the trend. To fully grasp the magnitude of this demographic wave, visualization is key. A bar chart comparing senior renter growth rates between 2013 and 2023 across major metros: San Francisco, Pittsburgh, Minneapolis, St. Paul, Portland, and Austin, will make the trend immediately clear. Such a chart would show San Francisco Bay Area seniors make up over 13% of renters. Pittsburgh seniors 55+ account for 18% of the rental market. Twin Cities, more than 15% of renters are older adults. Portland seniors 65+ increased from 12% in a decade. Austin, Texas senior renters grew 81% in 10 years. This side-by-side comparison would highlight not only the scale of the trend, but also its geographic diversity. From high-cost coasts to affordable Rust Belt cities, from the Midwest to the booming South, the senior rental boom is shaping housing markets nationwide. The rise of senior renters is not confined to one type of city or one economic condition. It is a truly national movement with distinct regional flavors. In expensive hubs like San Francisco, seniors rent to stay connected without being crushed by costs. In Pittsburgh, community and access to services are the drivers. In the Twin Cities, healthcare and cultural engagement matter most. Portland represents steady, lifestyle-driven growth, while Texas epitomizes the explosive potential of this demographic wave. For policymakers, developers, and investors, the message is clear. The senior rental market is not a niche, but a fundamental demographic force. Understanding the regional differences will be essential for meeting the housing needs of an aging America over the next 2 decades. Part 3. How investors and landlords are adapting. The demographic shift toward an older renter base is forcing landlords and investors to rethink the way they structure leases, manage properties, and attract long-term tenants. Seniors are not just another segment of the rental market. They represent a stable, loyal, and often overlooked group with unique needs and expectations. To capture this opportunity, property owners are adjusting their strategies across several key dimensions. Stability and security. One of the strongest drivers for seniors choosing rental housing is the desire for predictability. Unlike younger renters who may be more transient or willing to gamble on short-term leases, seniors often prefer multi-year contracts. This provides them with a sense of stability, both financially and emotionally. For investors, this is a golden opportunity. Long-term leases reduce turnover, vacancy periods, and marketing expenses. In fact, according to the National Association of Realtors, NAR, landlords who adopt consistent, moderate rent increases, rather than sudden spikes, are more successful at retaining renters aged 55 and older. Seniors tend to value security over flexibility. Knowing their housing costs won't fluctuate wildly allows them to plan their retirement income more confidently. Thoughtful screening. Traditional tenant screening processes lean heavily on income verification through W-2 forms or recent employment history. But this model doesn't fit seniors, many of whom are retired. A landlord who evaluates only employment-based income risks, overlooking highly qualified tenants. Seniors often have steady income streams from Social Security, pensions, retirement savings, or annuities. These sources are typically more reliable than job-based income, which can be subject to layoffs or market fluctuations. Adjusting screening criteria to recognize these income forms not only broadens the tenant pool, but also reduces the chance of rejecting financially sound applicants. In many cases, seniors present a lower credit risk than younger tenants, as they carry less debt and prioritize timely payments. Accessibility upgrades. A common misconception among landlords is that catering to seniors requires large-scale renovations or expensive retrofits. In reality, small, thoughtful improvements can make a property significantly more appealing to older renters. Simple features like flat walkways, adequate lighting, grab bars in bathrooms, and non-slip flooring create a safer, more accessible environment. The cost of these adjustments is often modest compared to the benefits. Not only do they attract senior renters, but they also appeal to younger tenants who value modern, functional design. Moreover, such improvements can lower liability risks for landlords, reducing the likelihood of accidents or injury-related claims. Responsive maintenance. Maintenance is perhaps the single most important factor influencing seniors' decision to rent rather than own. Many older adults are downsizing precisely because they no longer want the burden of home upkeep. When they rent, they expect maintenance requests to be addressed quickly and efficiently. Landlords who fail to respond promptly risk alienating this demographic. A leaking faucet, broken heater, or malfunctioning elevator is not just an inconvenience for seniors. It can pose serious health and safety risks. On the flip side, investors who emphasize responsive maintenance teams build strong reputations and benefit from higher tenant satisfaction and retention. Pet-friendly policies. Companionship is another critical factor in senior living. Many seniors live alone, and pets provide emotional support, social interaction, and a sense of purpose. Restrictive, no-pets policies can immediately disqualify otherwise ideal renters. According to Redfin, apartments and homes that allow pets achieve 20% faster occupancy than those that don't. For landlords, this means shorter vacancy periods and higher rental income stability. Offering reasonable pet policies, such as allowing small dogs or cats with a refundable deposit, can make a property far more attractive to older renters without significantly increasing risk. Flexible rent payments. Another subtle but impactful adjustment is aligning rent collection schedules with seniors' income cycles. Most retirees receive payments from Social Security or pensions on specific days of the month. Allowing tenants to pay rent on those dates, rather than rigidly requiring the first of the month, can dramatically reduce financial stress. This flexibility doesn't just help tenants, it benefits landlords too. Aligning payment schedules reduces the risk of late fees, evictions, and strained landlord-tenant relationships. It signals that the landlord understands and respects the tenant's financial realities, which fosters trust and loyalty. The data advantage. Senior stability versus younger turnover. To highlight the financial benefits of adapting to senior renters, consider the contrast in turnover rates. A pie chart comparison between senior rental communities and millennial rental properties would likely reveal a striking difference. Senior rental communities show much lower turnover, as tenants tend to stay for years once they find a stable, safe environment. Millennial rental properties, by contrast, often experience high churn, as younger tenants move frequently for work, lifestyle, or financial reasons. For investors, this translates into lower vacancy losses, reduced marketing costs, and stronger long-term cash flow. Simply put, retaining seniors means retaining profits. Final thoughts. The senior rental market is not a fringe opportunity. It's a growing, resilient segment that will only expand as the population ages. By adapting policies to prioritize stability, thoughtful screening, accessibility, responsive maintenance, pet-friendly living, and flexible payments, landlords can not only capture this demographic, but also build stronger, more profitable portfolios. Far from being a burden, senior renters may represent the most reliable and loyal tenant group in today's volatile rental market. For investors seeking long-term growth and security, catering to their needs is not just socially responsible. It's a winning business strategy. Conclusion. Every single day, more than 10,000 baby boomers turn 65, according to the U.S. Census Bureau. This staggering number underscores the scale of demographic change reshaping the housing market. At the same time, the Federal Housing Finance Agency, FHFA, reports that home prices, property taxes, and maintenance costs continue to climb, placing ownership further out of reach for many older adults. Against this backdrop, renting is no longer seen as a fallback plan. For millions of seniors, it is becoming the smart, strategic choice for financial security, lifestyle flexibility, and peace of mind. This reality challenges a long-standing stereotype. Senior renters are often assumed to be financially fragile or less desirable tenants. In truth, the opposite is often the case. Seniors bring stability, capital, and loyalty to the rental market. Many live on steady income streams from Social Security, pensions, or retirement savings. Their spending habits are predictable, and their risk of abrupt job loss is non-existent. They are far less transient than younger cohorts, leading to significantly lower turnover rates. For landlords, that means reduced vacancy, fewer marketing costs, and long-term, reliable cash flow. The implications for investors are profound. Seniors represent a golden customer segment in an era when volatility defines so much of the housing market. Unlike millennials or Gen Z renters, who frequently move for jobs, lifestyle changes, or financial shifts, older renters tend to stay put once they find a safe, affordable, and well-managed property. This loyalty transforms into tangible financial benefits, stronger occupancy rates, more consistent revenue, and lower operational costs. Catering to this demographic is not only a business opportunity, it is also a matter of timing. The senior population will continue to expand for decades, and their housing choices will drive demand. Investors who act now, adapting properties with modest accessibility upgrades, responsive maintenance practices, pet-friendly policies, and flexible payment options, position themselves to capture this market before it becomes saturated. In doing so, they future-proof their portfolios against shifting generational tides. At the heart of the matter lies a simple but pressing question. Are you building a rental portfolio for the renters of yesterday or the renters of tomorrow? Many landlords remain fixated on millennials and Gen Z, assuming they represent the future of rental demand. Yet, the numbers tell a different story. The fastest-growing segment of renters is not young professionals chasing urban amenities. It is seniors seeking comfort, stability, and community. The opportunity is clear. The only question is whether landlords and investors are prepared to seize it. Seniors are not a niche market. They're the next frontier of rental housing. By understanding their needs and aligning business models accordingly, property owners can unlock both profitability and long-term resilience. The housing market is changing. Baby boomers are redefining what it means to age, and in doing so, they are redefining the rental landscape. The landlords who recognize this shift will be the ones best positioned to thrive in the decades ahead. So, ask yourself, are you still building for yesterday's tenants, or are you ready to embrace tomorrow's?